What's up, folks? Happy weekend. Happy Friday. Today, I'm going to try to stay on topic and I'm going to teach about spikes. That is my proprietary indicator that I charge a lot of money for. No, I don't. It is a very useful, very useful tool for finding trades. It's an indicator that I wrote for TradingView, and I don't like to charge people for it. I get accused of, being too cheap about it because nobody appreciates things unless they pay for it. But this right here, today we have a great example of it on the NASDAQ here at the open. There's been a lot of questions on my Discord about it. So I want to have a teaching live stream this week where we look at a couple examples, go through my rules of what I think is a good trade for taking spikes, and definitely look at a couple of examples in everything from Bitcoin to the S&P 500 futures to the NASDAQ futures to stocks. It's pretty universal. So we're going to play some music to let people filter in, and then we're going to get to it along with this week's update, market analysis. Is it going to go up? Is it going to go down? Hang on just a second. I'll be right back. All right, Joe, Job Benville. Hey, what's up? Neo, you want to look at Neo, really?
All right.
Hold on. I think you make sure that I don't get an echo.
Job Benville.
Hey, what's up? There we go. All right. So, welcome. Happy Friday once again. Neo, man, Neo is not something I've heard in a long time. What a disaster. Was it up a bunch today? I mean, it's gone from $4 to $5, but it's down from there. I remember some YouTuber, maybe it was Meet Kevin, that talked about Neo, and I remember watching a video back in 2021, and he was assuring his viewers, his thousands and thousands, tens of thousands, maybe even 100,000 viewers, that they just need to be patient. Actually, I don't think he gave any affirmative thing to do, but I just remember he spent a whole segment on it, giving people what they wanted to hear rather than making them mad by saying that, hey, that thing that you bought at $40 that's now back at your break even, yeah, just hold on to that, buddy, because whenever you see something that looks like this, surely that is going to do exactly that for you once you jump into it, once you become aware of it. But no, it doesn't. And if you can just avoid that kind of stuff, you're going to avoid a lot of headache. But anyway, I'm going to try to stay on topic because sometimes I bounce around when people ask questions. And by the way, if you have questions about some stocks or things to look at, I'll post them in the chat. I'll get to them in the last half-ish of the live stream today. But I want to teach today because I've had some questions about my spike trading. I've had some good spike trades over the last several weeks. And I'm also going to sit down and I'm going to record a video for TradingView. I haven't done that in a while, as sort of a tutorial for how to trade spikes, including all the rules. So I'm going to do one of those things while we're on the live stream today. And good to see all the friends and stuff that I usually get in here. What's up, Van Ficus? Oh, have I not? Thank you for pointing that out to me. I wasn't sharing in Discord. Sometimes, see, I tried to do a stream. There we go. I tried to do a stream on Twitter as well, and then I forgot to share on Discord. Now we're good. Thanks for pointing that out to me. All right. Cool. So, do a quick market update, just the high points, the stock market, and of course the crypto Bitcoin market. So S&P 500, let's see. Oh, we need to turn that off. Got it. Okay. So I usually measure the S&P 500 by the ES, the S&P futures. I think that's the best to go on. You can use SPY. It's going to look pretty much the same, but yeah, I like the S&P futures because they go 22 hours a day. So more data, less gaps. 5 up days, 5 big bullish up days starting on Monday this week. Wow. I knew, and I didn't know, but I took some puts on SP5 SPY back in, I think, the middle of August, basically the second to last week of August, somewhere around here. A little early, obviously, but this big yeet that we had right here, and that's what I call something like this, a yeet, that's a technical term, is something that really bothers me whenever you have a market or any kind of instrument do that. Too far, too fast. What you want is you want to see things pull back and just kind of lazily, like an old man getting out of bathwater, get on up there. And invariably, I always have people, especially at the beginning of this year, asking me, should I short the market? Is it going to crash? Is it going to crash? Is it going to crash? Every time we get a little bitty pullback, they're always asking me if they should buy puts, or they just take them out and they just think they're going to beat the market. But whenever you see something like this, and it happens every once in a while, a big, solid run-up like we had in the first part of August, that's when you're actually better off taking a little bit of a put. And so I actually got out of my puts when we had this big, giant down day at the beginning of September, either Thursday or Friday of last week. Glad that I did. I kind of thought this week that we would see a little kind of reversion down. We have definitely not gotten up to the high. We haven't made a new all-time high for the year, which was set back in July, nor did we get it in August. I thought this would be a little bit deeper here, but I'm playing it as I can. I'm looking for a short because, man, look at this big upswing this week. Like, as a contrarian, I could not help but try to look for some kind of short because I see all that profit down to the bottom, but it didn't give it to me. It did give me one trade yesterday. This is why I wanted to do this topic, a spike trade. It's this little indicator right here that you see where it highlights the bar and it shows crosses on either side. It's nothing fancy. If you want it on TradingView, reach out to me on Discord. I'll add it to your username. And I'm going to show you how to use it today. But that trade on Thursday, I would have loved to show you guys a much better, a huge profit potential, but instead I just was able to pull a little bit out of the ES on the 5 minute, and that was this trade right here, this little spike. Going to dig into it with the replay feature and show you like bar by bar how that developed. And you can also see how there was another spike that followed it, a little secondary spike I call it here. It's essentially just when price goes very quickly in one direction and then reverses back the other way. That's a good sign for a reversal. And that was a bullish reversal there. And we had another bullish one today on the NASDAQ here. At the very beginning, very much at the very open, it was right here, right there at a prior pre-market low. And so that is what you want to look for. And I'm going to go through the rules of what I look for in just a second. So NASDAQ's going to be pretty much the same. Basically, I'm just narrating the market, but I want to look for at least one more short going into next week. Not going to take anything over the weekend, but I don't like that this second high that we made back in August, at the end of August, if it was really truly bullish, I think it should have gone. And so I'm definitely, my feelers, I got my spidey senses tingling for a short here. And that's what I'm going to be looking for next week, especially after we had 5 big bullish days this week. The market just doesn't like it. It's become very, very whipsawy, or leptokurtic is the specific word, where you see expanding volatility. And then if it does short, I know that I'm going to be looking for a VIX to get up to about 38. That would be a nice little drip. We got a nice, interesting VIX range that occurred back on August the 5th to work off of. So NASDAQ, I really mostly follow the S&P 500, but you're seeing kind of the same structure. You had an all-time high in July, didn't quite get there in August. This is actually looking more bearish than the S&P 500. Bitcoin, what can I say except that everyone is frustrated? I'm less frustrated because I've been short for a while, so now I'm less short. Excuse me, less frustrated. I'm still short. Been short since really starting in March and April, and I've just kind of sat here and waited as everyone else for this to break out, just like break down, just as everyone has been waiting for it to go up to whatever, $13 million of Bitcoin is what Michael Saylor said this week. Saylor actually bought $1.1 billion more. At least he announced it. His buy-in price was about 60 for this recent one, so he's back to break even on that trade. That's what it is. It's a trade. They're basically diluting their shares to purchase more Bitcoin. And yes, I also have MicroStrategy puts. Am I going to blow up? Am I going to lose a lot of money? Well, if you ask some Bitcoin maxis, I am, because they are just absolutely confident that just by buying this one thing, Bitcoin, they are going to soon be the world's billionaires just by sitting and doing nothing except buying what the internet tells them to. It's bold strategy, Cotton. We'll see if it works out for them, but I can't be a part of that. I must be against that. So that's the general market. We'll see what happens next week. My spidey senses are tingling bear on the ES, and Bitcoin, my book is short. It's definitely slow. But all right, yeah, get your symbols in. Let's get our learn on. So the trade this week, and of course on my Discord in the futures chat, posted about this on Thursday. I really wanted it to be more juicy because going into it, I need to separate rules from lessons. So let's start with the rules before I start talking about how important timing elements are. So this was yesterday. This is on a 5-minute chart of the S&P 500. Actually, let's go to before the spike happens. All right, so here we are, 5-minute chart. And that, to me, as a contrarian trader, tells me I want to short this. Ignore this spike right here. if and when you do put the indicator on, you're going to have, like any indicator, noise. Not every moving average cross is going to be a good one. And so what I'm going to go through, and what I really want to do here is separate out the good spikes from the not good spikes. So let me kind of do a little quick dry run about what I want to talk about, and then I'm going to do an example and a teaching format and record that to TradingView. Yeah, if it's on the internet, it must be the truth. So let's see. Which one do I want to use? I do want to use this for my example. So let's see. Publish record video idea. Yeah, I can do 2 examples in here. Okay. I hate that you can't pause the recording. And so, all right. What's up, traders? I'm going to recording. Oh, and you have to do it all in one take. So it's like, we'll do it live. All right. It's a lot easier for me to just like talk to you guys as opposed to have to record stuff. That's why I don't do this very often. But I got to do it. I want to do it. So, all right, let's do it. What's up, traders? I want to talk about spikes, spike trading. Spikes are a reversal signal that I discovered by getting stopped out a lot when price jumps in one direction and then quickly reverses to the other. There have been a lot of good examples, and I'm going to use one from this week using TradingView's bar replay feature to show how to trade these spikes. Now, by the way, this indicator is one that I wrote up for TradingView. If you want it, just send me a message on either TradingView or on Discord, and I'll give it to you. I'm not selling it, even though a lot of money can be made on this, because what it essentially shows is where price swings in one direction and then goes back the other way. Let me get really quick, just kind of show how that sort of develops. We're going to make it really slow. This is Thursday this week, the 12th of September, 8:25 on the 5-minute chart of the S&P 500 futures. And so basically at 8:30 there was news, and you have one of these big giant news bars. And what really happened here was price spiked above the prior pre-market high here set at about 3:30 a.m. Eastern. And that's key. That's key. The main things, we're going to only write out my rules here. So, spikes must be at a major SR. That's really key. Now, the types of SRs are going to be highs, high lows, major high lows, and also I look for 50% retracements. Now, you can use other Fibonacci retracements if you prefer, but I only really look for the 50% retracements. And now, as of the last year or so, I've started looking for volume profile levels. Those are really, really key. And so that's going to be what I'm looking for. And this fits that criteria there, because we have, of course, a high that set up in the pre-market, really clear, really easy to see. And then you have the bar spike up within that same 5 minutes and then close back inside the range. And that's what the indicator basically shows. And then I'm going to have the crosses that you see are for setting up the actual trade. The entry point is always going to be this red line, either the red line here or the red line of the bar itself. Now, what this is based on is Ichimoku. The Ichimoku Tenkan-sen. I've had questions about that, like what is it, why is it like that? Well, Ichimoku is an indicator set that looks like this. I'm not going to go into it in this video, but I just picked the red line as sort of my trigger. It's the 9-period median. Basically tells you where the center point is. Again, like I said, I like 50%. And you have these, this would be a short spike because, again, think about it. People got long. People jumped into this going bullish at 8:30 on news. And now think if you're a trader that went bullish up here. You need to get out of your position. And what you're trying to do with the spike is play the reversal of people getting stopped out. Whoops, that needs to be a short trade. And so what I like to do is I like to just set a stop right above that high because again, everyone should already be stopped out at this point, right? Think about how many people put their stops up here, and how many times have you taken a trade and it comes up, takes out your stop, and then goes the other way? That has happened to me for years and years and years, and then finally, about half a decade ago, I figured out let me just make money on that instead. And so when you do that, you can usually set up a 3-to-1 risk reward ratio. The little cross right here basically measures a 2-to-1 from the entry to the stop, and then the next was a 3-to-1. And you want to make sure, let's go here to the next points. The target, or let's see, the profit target must be, I want to say reasonable. Let's just say within the next major support resistance. Okay, yeah, I like that. I like that definition a little bit better. And I'll go into a lot more detail on that as we go along. And by the way, if you guys have questions, I don't mind asking. I'm doing this on a live stream, by the way, which I do every week at 4 p.m. So if you guys have questions on the way, I love teaching. That's why I do this. So the next resistance supports, because we're going to be going short on this, and look how juicy this would have been if it actually gone short, is 5,500. That would have been a great target, but that's a little far for day trading. So what we're going to do is we're going to look at the volume profile for this leg up, and we're going to see where are our major levels. Well, we have one support, the point of control is there at about 5557, and then the next one, which is more closer to our 3-to-1, is the 554575. And so I'm going to make that a little bit further down like that. And then there's going to be our trade to take short. Now you notice it hasn't triggered yet. That's because I'm going to be patient. I don't want to jump in this thing with a market order because very often, and this is what the whole premise of it is you're going to get a pullback to that red line, that 50% retracement level, the 9-period Tinkinson. And so we're going to watch that play out. These are 5-minute bars. And so, we got our entry because we were patient. It took us about 10 minutes, but let's speed it up to about 1x right now. And we're going to sit there, and we're just going to be patient, and we're going to let it come to us. Now, of course, I took 2 ES contracts and take profit at the target there, and I felt pretty good about it. Made the trade free. I did move my stop down a little bit to here, but I didn't take it all the way down. As I said, I really wanted to see this thing break down, but market is very bullish this week, and it came back, and that's fine. But that's why I have a 3-to-1 target, and you can take it all off if you want to. You can take it a trade in itself, but this finally did come back and stop me out and go bullish, but that's fine. But this is a great example of trading these as reversals. Here's a little bit better one. Let's look at today's NASDAQ. Now you can use this in any instrument, any time frame. I get asked that question a lot. I believe that any indicator should be good on any time frame, any instrument. Otherwise, it's curve fit for whatever you're just looking at. All right, so there we have 9:30 this morning. Again, that Thursday was an 8:30 news event. This was a market open, 9:30. That's key. That's really, really key. That's not a rule, but that's more of a let's call it a lesson or a hint. No, let's call it a lesson. Timing elements. Now, this can happen with stocks on earnings. It can happen around news, like it did on that Thursday. It can happen around FOMC. Oh yeah, FOMC's days are really, really good. When J Powell speaks, he can create some spikes as well, and really, really juicy spikes. All right, so we're going to set this one up again at our Tinkinson here. Our stop. This is a long trade. Oh, where did this spike happen? I'm getting ahead of myself. It happened at this pre-market low that was set at 842 this morning. And so what you're looking for is people that were getting long off, let's say here, and they had their stop losses down here, and they just got taken out. or people that went short thinking this thing was going to go down, and now they're looking to get out of their trade because, well, they don't want to be on the wrong side and lose money. You're basically playing the psychology of the market here, where price thinks it's going one way, and then everybody gets burnt, and you're trying to get in where everyone's getting burned. All right, and so to get a 3-to-1 on our risk, we're going to have to go up there. And if we look at the prior pre-market high, which was about 140 last night, is that within our rules? Are we at that point? Yeah, target must be within the next SR. We can even probably go up to that high right there if we wanted to. Yeah, so we have a pretty good range here to get into a long trade, and that did play out. We already know, we already have spoilers that the market was bullish today. And so that is another example right there of it going the direction we want it to go. So I don't have a preference, V1. You can use it. I will say this, like when I'm day trading between 9:30 open and about noon, I'm going to do the 1 minute. I actually don't trade futures outside of that time frame. But 5 minute is going to have a lot less opportunities. But you know what? The higher you go in time frames, it's going to be a lot cleaner. Let me look at one more example here. This is on a stock. This is on Lowe's. This is from a couple of weeks ago. And what I like to do is this is kind of my little trick. Not a trick. I look for the open 30-minute, because the best way to kind of divide up the time frames for stocks are in 30-minute increments, because there's 13 30-minute bars in a given day. So it's a nice way to kind of get some good setups intraday that can turn into swing trade setups. And so this is Lowe's. What actually happened on this date, I think it was August the 13th, was Home Depot, which is a very related company, had earnings, and it created a opening bar spike. I love these things. These things that happen from the period of 9:30 in the morning, the open, till about 10 a.m. These are really good, because think about all those orders that are getting cleared out and how much volatility can happen in that first one. Notice also that we have, let me read my rules here. This is a great example I wanted to use because this is at a 50% retracement. I always try to measure what makes it. A lot of people ask me, what do you measure? Where do you start it? Where do you end it? Just do what makes a lot of sense. I mean, we got a lot of gobbledygook back here, but really this trend, this section of the market that began in July to here, that's a trend. And then we got a nice 50% at 230.41, and boom, that's what we spiked out on. Oh, I forgot one thing in my rules. So 3, ATR clear greater than 80%. What does that mean? Let's talk about that before we play this out. So if you notice here in the indicator, it says ATR clearance 136.53%. So what this indicator fires off of is the distance between the prior high or low and the low of that bar, okay? And so that distance right there, to keep it normalized for different instruments, I use ATR, which stands for average true range. It's the average height, high to low, of the last, in this case, I think is about 20 bars. You can set that in the indicator, by the way. So the ATR is basically a measurement to really figure out what is significant. And so essentially what this tells us is that this distance, this square box right here from high to low, is 1 and 1.36 ATR. So it's more than 1 average true range. In other words, it's significant. It's a real break. And that keeps you from having tons and tons of spikes. That's what helps me normalize the prices. And my ground rule is the clearance must be 80%. Now you can set that to show or not show in the indicator if you want. But this is what I'm only going to take ones that are 80%. Higher ones are better, but doesn't necessarily mean that they're 100%. But higher the better, yes. And this is definitely ATR clearance of 136. Let me reverse real quick. Let me look and see, show you guys what the ATR clearance was on that ES 5 minute from. Hold on. Oh, let's clear it. Go back and then we'll jump back to Lowe's. So this one, we have to go. By the way, if you're using the replay feature, you have to go back because it doesn't draw it. So this one from that 8:30 was a 192% break of there. So that fits our rules. And the NASDAQ from this morning was a 107%. So we fit our rules on both those. And also the lows. And this is going to be the last one we look at. Again, if you guys have questions, you can send them to me. I prefer for people to ask on my Discord channel where I talk about these. That way everyone can answer the same questions. I had someone ask about, let me bring that up real quick from the chat. Well, I'll do that after this. So yeah, this one, great example, happened at the 136. Lowe's is also a company that I happen to be bullish on. I already own Home Depot, so I don't mind double dipping into the home improvement parts, whatever material sector. Nice, easy 3-to-1. In fact, because the high is all the way up here, what I'm probably going to do is I'm going to say, let me just do a little trick here. I'm going to find out, okay, where's our actual proper high? Yeah, we're going to use that. That's where the VP level is for that area. We're going to go up to there. And at 245 is going to be our level that we're going to target. 4-to-1 risk-reward ratio. And that's where we're going to take a little bit of profit. I'm going to leave some runners. I am buying shares, by the way, but you can do options if you prefer. I'm not going to hate on you. I just like actually building a portfolio of winning trades. And boom. Boom, boom, boom. So we hit it. Yeah, we hit it. We got our target out right there. That is why volume profile is so freaking valuable. Although it wouldn't have mattered because Lowe's kept on going. But it was a good place to get out there based on that high before it finally broke a little bit higher. And you leave runners on as well. So that is a good example. Of course, I need to make some more videos about volume profile because it's like a cheat code. But that is the essential usage of the spikes. And you're going to see in a lot of these cases, a lot of people ask me, if we just go back here and look, hey, the indicator fires. Like I said, moving averages will fire at different points. And yeah, you're going to see this happen a lot. But what do these all have in common? They did not have rule number one. They were not at a major high or low. They were not at a major retracement. They're just kind of out there in the middle of nowhere. But if you're patient, and you look for spikes to happen at a key support or resistance, those are going to be the ones that you want to take. Think about it as if you were somebody, a trader, that was in that position and on the wrong side of the market. Like this person right here, or these people that tried to get short, they tried to short it at the open. Now they're in trouble. And what they got to do if they're in trouble? They got to stop out. And what you see as you're making money as this reverses is other people getting stopped out. Hey, I'm sorry, but the market is a zero-sum game, and you want to win. So be on the winning side after people have already lost. So hope that works. Hope that works for you guys. Again, if you want this indicator, shoot me a message on Discord, and I will give it to you. I don't charge for it. I just ask that people make money and thank me and become better traders, because this is something that took me half a decade of losing to learn and figure out, and I've been using it for a half a decade now or more to win, and I want you guys to as well. So hope that helps. Trade wisely. We'll see you guys in the next video. Boom. All right. What's up, traders? I want to talk about spikes. All right. So I'm just going to talk to you guys while that uploads because I don't have another tab up. But that's what I wanted to do today. Yeah, thanks. Well, I don't try to be funny. If I actually try to tell jokes, nobody laughs. Only when I'm being serious do people laugh at me. Yeah. Need you to rewrite the script so it works on TradeStation. Just trade TradeStation through TradingView, Jen. Or are you not wanting to like pay for like a premium? Yeah. Oh, I saw. Okay, because they stopped letting me stream on TradingView. I saw this on Reddit. I saw this on Reddit, and I hesitate to share this because it's one of those if it's too good to be true kind of things. Let me find it. Okay. I think that they deleted it. Somebody posted a cracked version of TradingView on Reddit. I wish I would have actually saved the link. I saved the zip file, but I definitely did not install it because yeah, that it just kind of like I kind of worried a little bit about that too much as a matter of fact. It just seemed a little too good to be true, especially trying to run an executable on your computer. Yeah, it definitely smells fishy, exactly. Um, but I saw it, and but the thing is, I mean, they could just easily block it. You know, if they have like an unconfirmed piece of software that's contacting their servers. Um, yeah, in fact, I really think that's just BS. Anyway, I saw that. I'm not going to promote it because it probably is a phishing scam. It's already been deleted. It's just too good to be true. I used to say give TradingView your money because it's a great platform, but then they stopped doing live streams because I guess they weren't making money off of it, which is my way to get to a lot of people, twice as many as I do on YouTube, and teach. And yeah, I got pissed off about that. Very pissed off. I was actually very, very, very upset about that. So, all right. Waiting for this progress bar at the top to finish because I don't want to. I don't want to like cancel it after recording it because you only get one take. Almost there. All right. Let's go. Come on. Let's do this. Publishing. Might be able to do that. Okay, continue publishing. There we go. Okay. All right. All right. Keep it simple because I'm talking to you guys. I won't let you sit here. Okay. Actually, do I like that? Let me do this. Yeah. Actually. You have to put in the thumbnail there. Boom. Okay. Okay. Boom. All right. Continue. Tutorial. Technical indicators. Yep. I swear. Publish. Publish. All right, we're good. We are good. Okay. All right. Let's, if you guys got symbols to look at, go ahead and get them in the chat. Man, Bitcoin really wants to get to that 60K, doesn't it? Let me really quickly look. So it's gotten so messy here. But let's look and see where the key volume profile point of control is here. So what I like to do is I like to look for just basically the past consolidation era, and then we're going to look at some of these levels here. Because we can't use 50% here because it's not a trend. It's a consolidation. It's a big, messy consolidation. You can see where basically the last time it held was right there. We can actually go back and make sure that's true. Let's see. Yeah. A little bit less, but yeah, getting close to that point. So let's see. I want to look for the real key levels. That's a high point. That is one right there. And then, of course, we have the closest one is there. And so really 69.75 is where, I would be looking if I was looking this weekend to see where it topped out at. Those are going to be our key levels there. Using a little bit of Ichimoku analysis, going out to the weekly. Yeah, and that actually matches up right there with the Kijun-sen, which is, of course, it is the 50% of this whole range. So, yeah, so this, yeah. So, definitely the key level here for Bitcoin as we go into next week is going to be basically right in here from about, it's basically 61 to 61.5. That is going to be our resistance going in there. So, it's going to be interesting to see what happens. Because if it starts to break a little bit higher, it's probably still going to keep ranging. It's such a battle right now. Who's going to win? Are the people, are the faithful, are the diligently faithful, are they going to be rewarded? There is hold on. There was a video that someone shared. What is it? Hold on, let me find it. It's like, it's not in Bitcoin we trust, is it? Let me see. Gotta go through my YouTube history. It was basically talking about how Bitcoin is sort of a religion almost. Let's see. Oh, God bless. Okay, here we go. Yeah, literally, this is called God Bless Bitcoin.
The dollar will dramatically lose its purchasing power.
So I actually know this guy. This is Anthony Gallipoli, I think that's his name is. Back in 2010, we met. I met him with Stephen Pear, and they started BitPay together. We actually went to California Pizza Kitchen because we were the only 3 people in Atlanta that had anything to do with Bitcoin, and met. And they were trying to take Bitcoin in this direction of using it as a payment service. I just didn't feel like getting involved with that at the time. I just didn't. They were trying to make it as above board as possible. But the reality is that whether they or me, essentially you didn't need to make a business around Bitcoin. You just need to buy and hold it. They were really seeing like, okay, let's get this out in the mainstream. Let's get people to use it, and they helped a lot. But I remember this guy. He ran some kind of like a modeling agency or something. And so what he would do in every meetup that we had was bring really attractive women around. Which, to be fair, that's what draws in a crowd of, Bitcoin's, primary demographic, I suppose. This looks like this video is going to show a lot of diversity, but the joke I've heard is, you go to an actual Bitcoin conference and there's a ton of diversity. You got white guys with beards, you got white guys with blonde hair, you got white guys with glasses, you got white guys with black hair. You got all kinds of diversity at these Bitcoin conferences. But anyway, I digress. All right, let's take a look at some symbols. Let's see. Sort of religion? No, it is a religion. Did I say sort of? I think I was just trying to hedge myself there. MCHP is, let's take a look at that for Zishan. You've been having some doing some good research, haven't you? I've seen you. Thank you for posting on our Discord your research. I can't look at every stock. So, little quick thing about volume profile. So, I'm going to start on the weekly, but I'm going to do a little change to that when it comes to volume profile. So, we're going to start on the weekly, and yeah, it's there. One thing I want to do, now the way the volume profile works, the way it does its calculation, is it goes, I think, 2 time frames down to that data. And so you want to kind of get as low as you can to get a more exact volume profile. Here, it doesn't matter. It's the same thing. But if we go down to, let's see, like a 2 hour, then we can't fit on the screen. So you'll have to stick with that. But yeah, that's fine. 76, 75. Yes, that looks good. I mean, that's the best way you're going to be able to kind of resolve this trade right here. So I like it. That's true. That's true. That looks good. Let's see. We looked at Neo. Do we really need to? Palantir. Oh, man. That is a favorite of a long-lost friend. He and I, we used to talk a lot on, like, he had a Discord. Man, we were trading and talking about this for all of 2022 into 2023. And, man, if he would have just held on to it from those periods, woof. This is what he wanted. This is what he saw. This is what everybody was thinking when it was so damn low. And now it looks really good. I don't own enough of it. I had enough of like a friend trade. Like, yeah, I'll throw a few $1,000s into it with you. But man, he was all in on this thing, and I haven't heard from him. So I know that doesn't answer the price analysis of it, but a lot. Where are you, buddy? It's bullish, and you're doing a good job here. You're doing a really, really good job of getting back up there, clearing the IPO volume profile at 24. I mean, I don't have a target for you. I mean, if I was going to don't have a target. If you've owned Palantir from at any point here, and you suffered through the drawdown, you hold on to this thing until it's at least 100. I mean, if you must, then the volume profile kind of tops out here. We had this little double top at 38.05, but you're getting very close to that 38.05. So yeah. Let's see. AVGO. Looks a lot just like NASDAQ, honestly. It looks just like the NASDAQ. It's the same chart. It's the same picture. And I really want to see another all-time high. I mean, the fact that we're not making it, the fact that we're starting to do this kind of little, this consolidation, I don't have an opinion. Lululemon, you want to start the Becky Index again, don't you? What's going to make the Becky Index? By the way, the Becky Index, look it up. It is a basket of stocks of stuff white women buy. Etsy, Pinterest. This was all fun stuff to buy several years ago whenever it was going up back in 2020 and, everything else. But, yeah, no, it's not quite as good when we don't have 0% interest rates anymore. Lululemon, you've got a lower high, a higher low. Is it occurring? It's occurring back in the COVID era. Didn't quite hit that VP level there. I don't know, man. It's you're catching a knife. You're catching a knife for sure. No, I don't need you back that far. Let's see. Yeah, let's do that. Catching a knife. Maybe. You averaged up on Lulu. Okay. Better than averaging down. Kroger. Look at that. Oh, I made a little secondary spike here on the daily. I mean, yeah. Aren't we bullish, Kroger? Aren't we? Yeah. All right. Yeah, man. I love volume profile. It's like a cheat code oftentimes. It's really, really good. Really, really good. Stocks, it's good on stocks. But stocks, what happens is sometimes if you're on a daily or weekly chart, you're having to look at years of data, and I'm actually not super confident that it's going to be all that useful for it. I want to go back to using 50% retracements when it comes to stocks, especially when you're on like the weekly time frame. Like one that comes in mind right now is, of course, Home Depot. Although the Home Depot example, if from the bottom of the COVID low up to the high, you have the 50% level at 280.62 on Home Depot, but when it got down here, you were able to kind of play a little off base and grab it even cheaper at 269.96 off the volume profile level here on this weekly chart of Home Depot. I picked it up off of 280 here around May of 2023. Sat through the next test of it, but it can work. It's just that I still, when we're talking like much larger time ranges, because again, it's based on volume and price. And when you go back to 2021 and you think about like the volume from 3 years ago, it's a different market entirely, right? I mean, you had stock buybacks going on. You had people, a lot more money, a lot more cash. That's all fundamentals. It could be nothing. It could be completely consistent. It's just that this far back, I still try to go for spikes and 50% retracements. But I'm not saying it's wrong. But that's one example of 50% working and kind of being related to it. Amazon is another one where from basically I call this the trade of the century. Because if you go all the way back to December of, or basically 2001, the end of the .com crash, the bottom of Amazon, and you go up to the high that it made in 2021, you pulled back to the 50% around 94.59, but not exactly. And then if you kind of do a volume profile analysis of this past price action where it's stopping at, again, you have that situation where yeah, you could have played a little off base and actually gotten it cheaper. Maybe you missed it, but what I really thought was really cool about Amazon was you had this structure here where you kind of had like a inverted head and shoulders, and then the last shoulder was a bounce off of that volume profile level there at 89.24. That's back in March of 2023. So I thought that was really cool on Amazon. So yes, totally negating what I said about being skeptical. It can be used for stocks for sure, for long distances. But again, I'm still looking for that 50% to match up with it as well, to give me that extra oomph. All right. So, did I get everything? Did I get all of the questions? If so, I'm going to go back to playing Satisfactory. Jen, where are you at? All right. Well, I'm going to close it up. Have a good weekend, folks. Hope you learned something. If you want the spike indicator, send me a message on Discord. And join the Discord. We have a channel where I talk about spike retracements and also spike breakouts. Well, that's a topic for another video. Thanks for joining, and have a good weekend, guys. We'll see you next week. Bye-bye.